The shareholders are locked in. These shareholder commitments are locked in, particularly the cash and property is locked in. The guarantees are not locked in until they're actually drawn upon. The board and management will continue to operate the business on a going concern basis. Hanover Finance in particular, we are looking to continue to lend where it is possible, and we've entered into arrangements with the trust, so we have protocols in place that will enable us to run the business with new lending included. We will not be able to lend unless we have in the bank, in the business, so excluding the $10 million in escrow, we will not be able to lend unless we have 2 quarters of future payments to debenture holders available and quarantined effectively. I think that the most important thing to me as the CEO of this business going forward is that we've got a very, very experienced group of people who are capable lenders and across the property market. This structure enables us to retain that group of people and enables us to retain the IP in managing the assets that we have in the marketplace. There are separate company plans. There are separate plans. There's a plan for. There are 4 instruments currently in place. There's the Hanover Finance secured debenture holders. There are the United Finance secured stockholders. There's the Hanover Finance subordinated note holders, and there are the Hanover Capital preferred bonds. So there are 4 different plans that will be voted on December the 9th, and all 4 of those we're hoping will be approved. There is really only one condition, and the condition for the shareholder support to flow is that the Hanover Finance secured debenture holder plan is approved. So the way it works, we're targeting all principal repayment to Hanover Finance secured debenture holders. We're targeting full payment of principal to the United Finance debenture holders, and we're offering, and those quarterly they'll be paid quarterly, and I'll come to the schedules later. They'll be paid from the first payment on 15th of March 2009. In each of Hanover Finance and United Finance, there is an option to prepay. So if we've got more funds and we feel that it's prudent to prepay investors, that is possible under both the HFL and the UFL deals. It is likely to happen under the UFL deal in particular. Anything over $7 million we're required to repay early to the smaller company, the UFL company. Only $65 million outstanding there. There's not such a requirement on HFL, and the reason for that is that we've obviously agreed that Hanover Finance Limited will be the going concern and will be the company that operates out of this beyond this completion of this repayment. So we'll be looking to make payments there, to make new lending there. So the structure is quarterly. Sort of over the first year, 8% will be repaid to the secured depositors and stockholders, 2% per quarter. First payment on 15th of March, the next payment 30th of June, thereafter at the end of each quarter. In year 2, it's 10%, 2.5% per quarter. Year 3, 12%, 3% per quarter, and years 4 and 5, 35%, and each of those years 8.75% per quarter. There is no capability for us under this plan to extend beyond year 5. The final payment will be made on the 31st of December 2013, and that's our commitment in this plan. On the offer to the subordinated investors, who are of course deeply subordinated to secured investors, is 50 cents in the dollar, and that will be paid once all of the secured debenture holders are paid on the 31st on the 31st of December 2013. I think that what we have done is we've spent a lot of time comparing this to what might happen under receivership. It's clear all of the advice that we have from the independent advisors to the trustees when they've done their analysis is that under any scenario, under any receivership scenario, the subordinated note holders, the subordinated investors would get nothing. So what we're doing here is the 50-cent offer to those people is really to try and bring them forward and get them to support this transaction by allowing them to take 50 cents away. Under this scenario, under the debt restructuring plan, we'll continue to trade as a going concern, in particular at HFL. We expect to bring HFL, or Hanover Finance Limited, out as a company operating in this very important sector to the New Zealand economy beyond 2013. Under the restructuring plan, we have the benefit of the shareholder support up to $96 million, of course, we have agreed a modified governance structure with the trustees. That governance structure will include a maximum of 2 shareholders on the board and a maximum of 2 independent directors on the board. At least one of those independent directors will be approved by the trustee. And Greg will talk more about that at the end. The trustees, we have 2 trustees involved here over the 4 instruments. New Zealand Guardian Trust for the Hanover Finance Secured Debentures and Perpetual for the other 3. Hanover Finance, the trustees have commissioned independent appraisal reports, so we've spent most of the last 17 weeks working with PricewaterhouseCoopers and Quartermentha as they've gone through our business, done due diligence, effectively gotten themselves in a position to write the independent reports. In the document that is sent out to debenture holders or to investors, there are summary reports from PwC for the Hanover Finance and the United Finance secured debentures. There is on our website from 11 AM today a much fuller report that will give significantly more detail in respect of those from PwC. So we've got summary reports in the publicly circulated document and publicly available much more detailed reports. Each of those reports, each of PwC and Quartermentha support the view that the proposal is likely to provide a better outcome for investors than receivership. What we've shown you here, and it's probably easier to look at these later, is a couple of the scenarios that are being published by PwC in their public reports. You'll see they've done a lot of work in those reports. You'll see that they've done a lot of work, and it clearly shows that in their view, debt restructuring proposal is likely to deliver greater returns to investors than a number of different scenarios. Obviously there are 3 scenarios here, and there are many more scenarios available. But keep going, same there. Quartermentha has assessed the proposal for the HFL subordinated note holders and the HCL subordinated investors, and they've come to the same conclusion effectively. That under a receivership scenario, those investors would likely receive nothing, and under this scenario they've been offered 50 cents in the dollar, albeit at the 31st of December 2013. Pretty much at that point, I'm going to hand back to that's the structure and the of the proposal. I'm going to hand back to Greg to take us through.
Thanks, Pete. As you would expect, the trustees that have governed our business for some time will be amended to give effect to these new company restructures if they are voted on the meeting of the 9th. As Pete has indicated, the boards of both UFL and HFL will comprise 2 shareholder representatives, 2 independent directors, at least one of whom will be approved by the trustee,